You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America.
Well, apparently there's a ghost in the machine, but anyway, here you are, here I am. Welcome to the show. Thanks for tuning in, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. That's reserved for members only and those taking the 1-week free trial. If you haven't taken the 1-week free trial, when Michael comes on in about 15 minutes, he'll walk you through on the screen how to do it. A couple simple steps. We'll get your indicators indicating, and you'll get 5 consecutive trading days where we treat you just like you were a member with access to everything. No credit card required. We want you to have a clear head so at the end of the 5 days you can make a well-informed and intelligent decision whether or not trading is right for you. So, again, 50 minutes, maybe an hour, Michael will pop in to do a recap of the live training room, and if he has time, we'll do a little live trading on the TradingView platform. Depends on what time he gets here. But anyway, we're here, right now. This is our schedule for the afternoon broadcast. The afternoon broadcast, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. No, Dan, I did not see that. Congratulations. That's awesome. Two different ways to join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down the page to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it'll log you right into our platform. The benefit there is you'll have access to the question box so you can ask questions and participate in the discussion. There will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. Now, you're not going to watch them all, obviously, nor do you need to, but it's a great resource that allows you to see how we've evolved over the years. From whence we began to where we are now, it's been quite a journey, and it's all chronicled and archived just for you, if you can't find anything better to do. Okay? All right. So, let's get into our daily devotional. The topic we're on right now is listening to God. We've been taught all our life, pray, pray, pray. But for me, and I said this yesterday, 90% of prayer is listening. 10% is my plea or petition to God. What I have to say really isn't that important because He already knows what I need. But I acknowledge Him and thank Him for His blessings in my life. Lay out whatever petition I have at the moment. And then I let Him talk. Our scripture today is John 10, verses 25 through 30. Jesus answered, I told you, but you don't believe. Everything I have done has been authorized by my Father. Actions that speak louder than words. You don't believe because you're not my sheep. My sheep recognize my voice. I know them, and they follow me. I give them real and eternal life. They are protected from the destroyer for good. No one can steal them from out of my hand. The Father who put them under my care is so much greater than the destroyer and the thief. No one could ever get them away from Him. I and the Father are one heart and mind. Again, that's John 10, verses 25 through 30. So we've talked about how God spoke to His people in biblical times. We talked Friday about how God speaks to people today. Yesterday we talked about how God gets your attention. Today, the hallmarks of God's messages to us. Jesus said of those who follow Him, my sheep hear my voice, and I know them, and they follow me. And I give eternal life to them, and they will never perish, and no one will snatch them out of my hand. My Father who has given them to me is greater than all, and no one is able to snatch them out of the Father's hand. John 10:27 through 29. What a great statement of hope and comfort this is to us. we can know the voice of the Lord. As we follow His voice and do what He says, we'll never perish. Neither will we ever be snatched out of His hand. But, you may say, how can I be sure that the voice I'm hearing is truly the voice of God? There are 5 identifying hallmarks of God's messages to us. They're a means of determining whether the voice we're hearing is truly the voice of God. If you have a question about whether a message is from God, line it up against these criteria. Number 1, the message must be consistent with the Word of God, the Bible. God will never tell us to engage in any activity that's inconsistent with Holy Scripture. 2, the message will usually be in conflict with the mainstream of conventional wisdom. We must recognize that most of the world is moving in a direction away from what God's Word says to be true. In most cases, God's message stands in sharp contrast to what the world around us has to say on an issue. But when God speaks to you, He calls you to His way of thinking and seeing. In the New Testament, this mindset is called the mind of Christ. Ask yourself, would Jesus do this? If not, don't do it. Number 3, the message will clash with fleshly gratification and basic human lusts. We must recognize immediately that any counsel is not of God if it urges us to gratify the flesh without any thought of the consequences. God gives us messages that please the Spirit of God within us, not our lusts and sinful desires. Number 4, the message will challenge one's faith to rise to a new level. A measure of faith has been given to every person, and our faith is to grow. We grow in faith when we hear from God, obey what He says to do, and then acknowledge God's faithfulness to His Word in our lives. And number 5, the message will call for personal courage to do what God has said or to change what He has said to change. If you're being asked to move against the tide of conventional human wisdom and act in contradiction to your fleshly nature, you're going to feel as though you're taking a risk in obeying God's message to you. Anytime you take a risk for God's purposes, you're going to need courage. And the Lord tells us that if we'll have courage, He'll strengthen our hearts. Psalm 31:24. His voice leads us not into timid discipleship, but into bold witness. 1 Corinthians 16:13. So take time to make certain that you've truly heard from God on a matter, and that you've heard clearly and precisely. Above all, make sure He's finished with all He has to say to you on a point before you go rushing off to obey Him. Make sure you have all the directions, assurances, insights, and details that He desires to give you. Then, subject the whole of God's message to the points we just discussed. Let's pray. Heavenly Father, thank you for calling us your own and holding us securely in your hands. Help us to hear your voice, follow you faithfully, and rest in the assurance that nothing can snatch us away from your love. In you we are safe, and our eternal life is secure. It's in Jesus' name we believe and pray, and everybody said, amen. Hang on, guys. Let me grab this. By the way, guys, if on your cell phone, if you go into the phone settings on your iPhone, you can turn your caller ID on or off. And if you have it turned off, when you call someone, it says no ID. So you don't know who's calling. And so who wants to answer that call, right? So you might check your settings because you could have got one from the factory where it's turned off. You could have bought one secondhand where it's turned off. You want it turned on so that people know it's you calling. And then they can judge the level of importance as to whether they want to stop in the middle of a live broadcast and answer the phone. Because that was somebody, 2 calls back to back. I'm thinking, my God, this must be an emergency from somebody. Oh, and if you ever get a call from the police, and I hope you don't, no caller ID. That's how they roll. They don't want you calling them back. Okay, all right. Numbers from around the world. Let's do it. Starting here in the U.S. with the cash markets, or the indices as they're called. Let's see what we got. The Dow up 758 points, 2%. The Nasdaq up 276, 1.75%. S&P 500 up 89 points, 1.75%. And the Russell 2000, our man in the street, up 28 points. That's just over 1.5%. At the end of the broadcast yesterday, we looked at the daily chart one last time, and My thoughts were that we would see the markets move higher overnight and today, and, well, even a blind squirrel finds an acorn every now and then, right? In the commodity basket, crude oil up 50 cents, trading 61.20 last. That's a gain of almost 1%. Gold up $38.70. Make that $39.10. Trading 30.12. Make that 30.13 last. That's a gain of well over 1.25%. Yes, Dan. Valerie will be in touch with you, and she'll send you all the information you need, buddy. Don't you worry. We'll take care of you. Don't worry. It's not an automated process. When Valerie gets the email, she has to do all kind of work, and then she sends you all the links and everything that you need, okay? So rest easy. All right. Silver up 41 cents, trading 30.02 last. That's a gain of almost 1.5%. In the Asian markets at the close, the Nikkei posted a gain of 1,876 points. That would be a little over 6%. Shanghai up 48. That's over 1.5%. And the Hang Seng up 299 points. That is also a little over 1.5%. And in the European markets at the close, FTSE up 208, 2.75%. The DAX up 490 points, 2.5%. The CAC up 173, 2.5%. So that gave us a green day in Asia. It was a green day for the UK. And so far, it's a big green radio Tuesday here in the US of A. Remember yesterday and the day before I said don't freak out. It'll come back. I pray none of you got into panic selling mode with your portfolio. It may dip again. You may have another chance to buy back what you sold. But it might not. So, anyway, today's numbers should at least allow you one night of decent sleep, I hope. Hopefully you're beyond that point and you know what to be concerned with and what not to be concerned with. Okay? Okay, on the news. Now, yesterday, U.S. stock markets whipsawed amid fears of a growing trade war triggered by President Trump's sweeping tariffs. The S&P 500 briefly hit bear market territory, defined as a 20% drop from its recent peak, while the Nasdaq Composite has already entered bear market conditions. The Dow Jones Industrial Average is down nearly 10% from its December high. All three indexes started the day lower before closing mixed. Roughly $9.5 trillion in global equity value was wiped out over 3 trading days, one of the fastest plunges since World War II. Meanwhile, the VIX, Wall Street's real-time index measuring the S&P 500's expected 30-day volatility, spiked past 60 for the first time since August before settling around 48. The news comes as Trump doubled down on his minimum 10% global tariff and threatened an additional 50% tariff on China. Analysts warn this could tip the U.S. into recession, though some predict the Federal Reserve may respond with up to 4 rate cuts this year. Trump said tariff negotiations with other countries will begin immediately. And now here it is, turnaround Tuesday, the 8th day of April. Remember that date. Biotechnology startup Colossal announced yesterday it has successfully revived the dire wolf, that's D-I-R-E, which went extinct thousands of years ago and was popularized through George Martin's Game of Thrones. The breakthrough marks the world's first de-extinction of an animal. The dire wolf roamed the Americas more than 12,000 years ago. Before its prey, large herbivores like bison were largely depleted. Colossal created 3 wolves, 6-month-old adolescents, Romulus and Remus, and pup Khaleesi. The company created the wolves using DNA fragments from a 13,000-year-old tooth fossil and a 72,000-year-old skull. They also used CRISPR technology to edit genes of the dire wolf's closest relative, the gray wolf, selecting for white fur. Colossal launched in 2021 and is currently valued at over $10 billion. It seeks to recreate extinct species like the woolly mammoth and the dodo bird. The company hopes the projects will yield profitable insights to benefit human health, like helping to develop artificial wombs. Now, while those of you that have an interest in science might find this very titillating, read between the lines here. Okay? When man or an angel starts trying to be God, bad things happen. So I'd be real careful with that one. U.S. stocks rallied today, as we said, but came off their highs by late morning as investors digested the prospect of U.S.-Japan tariff talks and the hopes for other trade deals. The benchmark S&P jumped over 2%, while the tech-heavy NASDAQ climbed around 2.4%, with NVIDIA rising 5%. The Dow also popped roughly 2%, adding around 850 points. Earlier in the session, the index had added over 1,300 points. Buyers are wading back into the market after Trump's fast-moving tariff push spurred a roller coaster session yesterday, which saw the Dow sink 350 points and the S&P 500 cement a historic 3-day loss. No pain, no gain. Spirits got a boost after Treasury Secretary Scott Bessent hailed the start of bilateral trade talks with Japan. The news alleviated fears that the White House wasn't prepared to cut deals on tariffs, given trade advisor Peter Navarro's comment to the Financial Times that Trump's tariffs were not a negotiation. And speaking of NVIDIA stock rose as much as 7% early today. Currently it's up a little over 4%, leading the Magnificent Seven tech stocks higher as they began to recover from steep losses following the announcement of the Trump administration's tariff agenda last week. Meta surged nearly 6%, Tesla rose over 5%, while Amazon climbed nearly 5%. Microsoft up 4%, and Apple up more than 2%. Trump knows what he's doing. But there's so many in places of power that don't want it. They want to bet against America. They hate Donald Trump so much that they would rather see the world in which we live. But see, they're in their ivory tower, in their gated community, right? So while there could be, bread lines in the streets like the Great Depression, it won't affect them. And they know that. And they don't care. All right, let's bring it home. Logic 247. That's our 24/7 around-the-clock E-mini alert service. We're currently in week 349. Over the last 349 weeks, we've issued over 19,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach our passport holders in their one-on-one mentoring sessions. Last week we ended up with 2% stopped out. The average over the last 349 weeks has been 20% or less. Now, when Valerie did the recap this morning at 6:30 a.m. Eastern, this is where we stood. This afternoon, of course, she will update the recap this afternoon, early evening, and post it as she does each and every day. But at the time she did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 22 alerts. At the time of the recap, we were still waiting on the outcome of 7. That gave us 15 actionable alerts, of which 1 or 7% would have been stopped out. Again, based on market structure. Now, the logic alerts are designed to help you learn how to read a chart. You should be able to look at a chart, any market, any time frame, and with the help of our humble indicator set, instinctively know what the next high probability move is. If you want to be a lawyer, you got to be able to read those law books, right? You want to be a doctor, you got to be able to read those medical books, right? But in the world of trading, there's no books with words and paragraphs and sentences. Well, there's books, but be careful there. There's only one worth anything, Trading in the Zone. But I digress. At the time of the recap, 22 alerts issued, still waiting on the outcome of 7, 15 actionable alerts, 1 stopped out. Every logic alert has an entry price, an initial target designed to help you get your goal for the day, and most of them then have additional targets and then a final trade to target. If it's a long alert, the final trade to target will be the weekly trading zone above. If it's a short alert, then the final trade to target will be the weekly trading zone below. Yes, you can trade them, but the most important thing you can do with them is use them as they're intended, to learn how to read the chart. So you can look at any chart and instinctively know where the next potential resistance is, the next potential support, which reveals the windows of opportunity that lie in between those 2 points. Take advantage. Remember, we're over 19,300 alerts. We're approaching a big round number, 20,000. What I do after that, yeah, we'll see. Now, long before we had the Logic 247 alerts, we had the concierge trade alerts, and they're different. Number one, they don't come out around the clock. The Logic alerts come out around the clock. They can come out at 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs don't come out around the clock. They're published as a static report right before the Globex Open on the evenings that I can. I always put a note in the discussion group in Telegram whether or not you should expect the CTAs at 5:55 p.m. Eastern, 5 minutes ahead of the open, or if it's a day when I'm not going to be able to publish them early, I put a note in that says that. Sunday nights are the one night that I typically will not publish them early. Okay? All right. If you're a member or trial member, make sure you read this information up here. It's very important. Last night was a night that I got them out 5 minutes ahead of the open. So as we go to the charts, all alerts are created on a 30-minute chart. Just remember that 5 minutes ahead of that first candle, all of our members, all of our trial members had all of these targets. S&P, Dow, Russell, crude oil, NQ, gold, and silver. So with that, we can now head over to the daily chart, where we start every day. There we go. All right, yesterday and last night in the discussion group, we talked about, this is where we closed yesterday. Okay. Remember at the end of yesterday's broadcast, we had a doji. I said, I believe we're going to close to the upside with a green body. Turns out we actually did. I said, the next area for major resistance is at the 24% reverse fib, right here. And then above that, the black step line. So we've traveled all the way up to the step line. Now we find ourselves back below the 24% reverse fib. So what's really important here is where we close for the day. Closing above the 24% fib, that would be very bullish. Closing below it, not so much. Your next major area for support on the downside is going to be yesterday's close, followed by yesterday's open, and then the low of yesterday. Okay. In a downtrend, you draw your fibs from the high to the low. In an uptrend, you draw your fibs from the low to the high. Daily chart is important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 5-minute charts, 30-minute charts, tick charts, and range charts. They're the ones who move price. So whether you trade futures, stocks, crypto, Forex, ETFs, I highly encourage you to spend 2 minutes with the daily chart of whatever you're about to trade, because it gives you a free look over the shoulder of the deep pockets that move price. Early on, they were obviously very bullish, pushing us all the way up to the step line. Okay, but now look where we are. Okay, so what has changed? Well, time will tell. Let's see where we end up closing today. Also, by looking at the daily chart, you're able to identify major areas of support and resistance, just as we did yesterday, that you cannot see on those smaller time frames. Okay, the vertical line. Remember, all alerts, both the logic and the CTAs, are created on the 30-minute chart. Nothing magic about 30 minutes. It's the time frame I chose years ago. They say if it's not broke, don't fix it. So I left it alone. The green line's the BBC. It stands for Bull Bear Cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, then we're bullish and expect higher prices. We've just dropped below the BBC, and blue and climbing has now turned to red and falling. So looks like we're headed into a sell-off. Okay, we saw it on the daily, we see it here. Next major potential support is going to be down here around 50.56. Okay, and this spot right here, we're right at this potential support right here, right now. See that little wick? Okay, we're right at it. Now, price always reverts to the mean. In our case, the mean is green. It's called the BBC. When price pulls up from below or down from above, the pullback holds more often than it doesn't, until eventually it trades through. So we have a leg and a retracement, and a leg and a retracement. Now, the weekly trading zones are published every Monday morning at 6:15 a.m. Eastern. When price rises to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. So here are great examples: support, resistance, support. But eventually, we'll get above a zone or below. But look at the retracement. It pulled right back to the BBC and the zone. And then we had that fake news spike yesterday. But see how price always comes back to the BBC. Then you get a leg and a retracement. Leg and a retracement. This is where we opened last night. Everyone had these targets 5 minutes ahead of the open. All members and all trial members. We're above the BBC, so we expect higher prices. We've got blue and climbing. We expect higher prices. And so what happened is it took us right up to the weekly trading zone at 51.91/92. What do we have for an opening price? 51.26. So we'll call it 30. This was a 60-point move up to the zone. From the open, 60 points to the zone. You only need 2 points a day to reach your goal. Now, when the market finds resistance, it's going to go look for support. Remember, the pullback to the BBC holds more often than not. So from support, we go back to resistance, back to support, back to resistance, back to support. And then we get a leg and a retracement and a leg, and we hit our long target. Okay, now price has gotten below the BBC and the zone. As you can see on this pullback, the BBC and the zone held price up for an hour and a half, 3 30-minute candles. But now that we've made this break to the downside, okay, now this 30-minute candle still has 15 minutes left in its lifespan. But if we continue lower, you should expect, call it 50-60, just to be conservative. Okay, should expect support right there. If we get through that area, then of course you've got your short target here. But when blue and climbing turns to red and falling, that's when typically you'll remember the pullback holds more often than not, but eventually it's going to trade through the BBC. And that's when you start trading with the trend in the other direction. of those 19,300 plus alerts in the Logic 247 channel, every one of them is a trend trade. In other words, if price is above the 30-minute BBC, it's a long. If price is below the 30-minute BBC, it's a short. There are no counter trend trades out of those 19,300 plus alerts. Every single one is a trend trade as defined by the 30-minute chart and the 30-minute BBC. Now, that little area, we haven't taken it out yet. See how we came right down to it and bounced? That's what market structure's all about. Okay? Looking at a chart and knowing what the next high probability move is, and knowing where you're most likely to find potential support and potential resistance. The long target is based off this spike yesterday. Boom. The short target is based off these lows right here. Okay. And we have very wide zones this week because of the incredible volatility that we've seen last week, this week, and probably next week. Here's the Dow. This was the opening candle last night. It made a nice run at the long target. Didn't get there on the first attempt, okay, but it went more than enough to get your goal for the day. Once blue and climbing gets directly above price, it becomes potential resistance because it's probably on its way to becoming red and falling, which is bearish. So we come back to the BBC. Remember, price always reverts to the mean. Support will send the market looking for resistance. Okay, so these guys here managed to take out that spike by just a little bit. And we're always suspicious of just a little bit. Now, had there been enough buying interest, we would have continued up to this point. But there wasn't. Now, could there be more fake news out there sending the market down? Yep. These are not normal market conditions. But everything's still working just the way it's supposed to. On the Russell, here's the open. We consolidated at the zone. We've published the zones for the last 15 years, since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So we opened last night, we hit the zone, we consolidated, and then we popped up and we tagged the long target. So this candle opened at 1842.1 and ran up to 1855. So that's, well, 12, we'll call it 12 points. You only need 2 points to get your goal for the day. Resistance sends the market back to support at the zone, which sends us to the target, which drops us back to support times 2, the BBC and the zone. That sends us back up to the target, resistance, back to the BBC, support. And then we get a leg and a retracement and a leg. Now price has dropped below the long target. We got red and falling overhead. And where's price headed? Looks like it's headed to the short target, based off these lows right here from yesterday. Okay. Now, 1803 to 1793, that would be 10 points. With the Russell, you only need 2 points to get your goal for the day. On the NQ, here's where we opened. Price ran up to the weekly zone, resistance, sends us back to support at the BBC, which sends us back to resistance at the zone 17,840/41, back to the BBC, and then we get the perfect stack. Price, step line, blue and climbing, takes us all the way up to the long target and to the zone. And this high over here from yesterday lines up real nice with today's high. Market structure. So resistance coupled with red and falling has now taken us below the BBC. We're below the zone. Okay. I would let price get down to about 17,389. If you want to keep it simple, go 17,343. That's 100 points. From 343 to 243, that's 100 points, $20 a point, $2,000 per contract traded. Okay? All right. Crude oil. Here's where we opened. Got a leg, got a retracement, pullback held. Leg and a retracement. But this time red and falling entered the picture. And so it took us down about halfway to the short target. Buyers came in, took us back up. We still didn't quite hit the long target. These highs right here could not take out the early highs of the session. That's put us back below the BBC with red and falling, and we are headed for the short target. Gold. This was the open last night. Price was trapped. Resistance overhead, the BBC. Support below it, blue and climbing. Blue and climbing got us through the BBC, got us above the zone. Little leg, retracement, leg, retracement, leg, and retracement. And we came just shy of hitting that long target, which was based off this bearish cross. When the red line gets below the green line, that's called a bearish cross. And when you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. The opposite's true of a bullish cross. Keep in mind it's an area, but right there is where they crossed. So we came just a few ticks shy of touching the target. Now, like the other markets, we're below the BBC, we're below this zone, we got red and falling overhead, we got potential support right here, 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 and then you're at the target. Remember, a $1 move in gold is worth $100 per contract traded. Silver. Kind of flat. Here's where we opened last night, and we just pinged back and forth between the BBC and the zone, and the BBC and the zone, back and forth, and then we consolidated at the zone, and we did make a run at the long target, but we got cut short. Okay, right there. So now price is below the BBC, below the weekly trading zone. We got red and falling overhead. And where's the market headed? Looks like it's headed to the short target at 29.58 based off this low from yesterday. So one last look at the daily chart. Price is right up against resistance at the 24. Remember, we made it all the way up to the black step line, and now we're right at the 24. Okay, Michael should be here any moment. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you, but we'll send you an email that explains what it means to become a member. You'll have access to 2 hours of live interactive training every trading day, access to private one-on-one mentoring, the strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. Also, as a passport holder, you'll get the Logic 247 alerts around the clock, concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern, you'll get the weekly trading zones, and you'll be able to attend the members-only workshop every Thursday night at 8 p.m. Eastern. Plus, you get the golden key that opens all the private channels in Telegram. Everything a trader needs, all under one roof, one low price. All right, Michael, where are you?
Yes, I am here.
Okay, take it away.
All right, I will do that in just 1 second. Here we go. Do that right now. Here we go, all the way over there. All right, so you guys should now be looking at my screen. Good. All right, here we go. Let me see who all is in here right now. Dan, you will get all your information soon, Dan, about the passport stuff. Okay. All right. Good afternoon, everyone. Today is Tuesday, the 8th day of April, 2025. Now, if you have not taken a free trial, let's go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that purple button. It's going to bring you to this page where all that we ask for is your name, your email, your phone number. Fill out the multiple choice questions down at the bottom right here. We need to get your TradingView login ID. If you want to get the indicators indicating on your charts, we need your TradingView login ID. Okay, that's what we need. Click on this link right here. If you don't have one, click on this link and it's going to bring you to this page, TradingView platform. Just watch this video. End up clicking on that link to get it. All right. When you get the TradingView platform, you're going to need to get real-time data. It costs $7 a month for real-time data. All right, you're gonna need to do that unless you have a broker that you can link in. You're gonna need to get that real-time data. All right. So we had a pretty good day today. I thought we were more than that, but it was a pretty good day overall. If you're gonna read the spreadsheet, you can read all the CBTC risk disclosures down at the bottom. Today we didn't trade the NQ at all because it's still too much of a spread for me to want to trade. We did trade the Russell quite a bit. We were 124 ticks on the Russell. We traded gold a bit. We're up 36 ticks on gold. And we traded the ES a bit at the beginning. We're up 51 ticks on the ES. Today it took 3 minutes and 3 trades to get to the goal for the day. At that point, we're up $2,250. And we took a total of 35 trades this morning. So on the month now, we're at $10,272.50. That's over 4 business days, averaging $2,568 per contract per 2-hour business day. On the year now, we've got our goal for the day on 57 out of 57 days. And we've gone 73 trading days now, 73 of my trading days. Since the last time we did not have a green day, 466 of my trading days since the last time we had a red day. That's actually, the total number of calendar days is really big, but that's the number of trading days for me. Okay, there's actually been probably about a dozen more trading days filtered in there. Now that I've taken a week off, I actually had a couple other things that I had to do this year. It made up for about 10 days over the last 2 years. Anyway, on the year now, we're at $94,560. That's over 57 trading days, averaging $1,658 per contract per 2-hour trading day. Following the 24/20 blueprint, where you would add roughly 1 contract per month, you'd be trading 4 contracts right now. And so far this year, if you quit trading when you get the goal for the day, that means you quit trading when you get to $100 a contract. You would have only had to work 8.16 hours if you did everything just like I did. And you would be up $19,392 on the year. All right. Averaging $2,374 per hour. All right. All right. So let's get into the trades. Now, I'm not even going to look at the NQ today, right? We traded gold and the Russell primarily. I'll show you the ES trades that we did in a few minutes. But let's just start out with the gold. Okay, start out with the gold. And let's crunch this up a little and crunch this up a little. Go all the way back here like this and this and this and this and this. All right, so this is where we started out with the gold. Right here, our first trade on gold was a break even. Okay, then the next trade on gold was right here. We ended up getting 10 ticks on that. The next one was here. We got 9 more ticks to get us to 19. And I started doing some training in here, suggesting where price was going to go, when price was going to go there, and what we're looking at. Then we had to stop out, and we went from 19 down to 4. Right, it was a 15 tick stop out. And then went from 4 to 7, so we got 3 ticks there. Break even, then went from 7 to 10, it looks like. So we got 3 ticks there, break even, then 10 ticks there to get us to 20. Then from 20, we went to 21. So we got 1 tick there, and 2 ticks there to get us to 23, and then 13 ticks here to get us to 36. And that is where we ended it for the morning session. Now, as I look at this, the trade that we're doing primarily this morning, and this is something that some of you guys may be curious about. Yes, Dan, I did. Okay, I'm just seeing what you typed in now. You will be getting an email later on with all the information, all the passport channels that you're gonna be able to get into and all that stuff, Dan. Okay. Valerie sends that stuff out, so she'll be sending that out to you later. All that information. Okay. So the one thing that I was doing today, one of the questions that I got today was, how do you these are the different types of trade setups, right? The most aggressive, which is what I normally do, where I trade both long and short, regardless of the trend. I trade long and short, right? Because usually you're in chop, like 80% of the time you're in chop, and the chop works really well with the aggressive divergence trades. The next less aggressive trade, I suppose, would be the aggressive trend trade, where you're only trading in one direction. You're still doing it aggressively, but you're only trading in one direction. Now, for that, you don't need divergence because you're trading in just one direction. Then there's a conservative trade, and the conservative trade is better. This was the question today, was how do you know when to use the conservative trade? When you have long legs is when you want to do the conservative trade, all right? Because a long leg down is going to create a flat spot on the bottom, and when you get a flat spot on the bottom, you're going to have a deeper pullback, which is going to create a flat spot on the top. Okay, that's typically the way that it works, because the markets are always doing the same thing, right? Always going down, and they retrace like 50%. If this down move goes from like here to here, and by the time you get down here, you're only this far through the down move, and it keeps going down to here, that creates the flat spot down here at the bottom. And if it's going to do a 50% retracement, it might reach the top of this right here at this point in the retracement, but it's going to go even further to hit that 50% spot. That's what's going to create the flat spot. All right. So when you have long leg lengths like we had today, it's a great day to use a conservative trend trade. All right. And with that, all you are doing is trading short when you're below the YBR and long when you're above the YBR, and trading when you come out of the overbought and oversold instead of when you go into the overbought and oversold. All right. That eliminates the flat spots. Okay, it eliminates the flat spots. Every now and then when you get to the end of a trend, you're going to have a situation where it doesn't go anywhere when it comes out of the overbought or oversold when you get to the end of the trend. Okay. All right. So this was the gold. We ended up with what, 36 ticks on gold. All right. Now I'll do the ES next because we only had a few trades there on the ES before we ditched the ES. Here it is right here. Okay. We did have this nice channel this morning. And you see what happened when it broke out of that channel? And remember what I was talking about the head and shoulder patterns on the 5-minute this morning? You guys remember that? I drew it all in here for you somewhere. I think I did it on the NQ. I drew it all in on the NQ. It was an ascending head and shoulder pattern. This actually broke down almost below the neckline of the ascending head and shoulder pattern on the ES. But this was the channel I drew in this morning. It was a nicely formed channel. And when it broke down below the channel, here's the first level of support. It just broke through that. That should act as resistance right now. This is on a 5-minute chart, mind you. Okay, it should act as resistance right there. Let's go back down to the 7 range, and we'll do the trades that we'll go over the trades that we actually did do this morning. Okay. Yeah, I'm just gonna do the alt back. Daryl, are you in here? Daryl's not in here. Wow, that's a lot of bars there on the ES. Wow. Yeah, that would have been really active trading this morning. Okay, so this right here, it looks like I did draw it in there on the ES on the 5-minute. That's the channel that I drew on the 5-minute. Okay, we're getting back there. I didn't trade the ES very long, so we're just trying to get back to the beginning of it here. Here it is. All right, so this was where we got the goal for the day right here on the ES. All right, we picked up, actually that might not be where we got the goal for the day. It's not where we got the goal for the day. We got 20 ticks on this first ES trade right here. We'd already gotten the goal by then. We got 20 ticks there, and then we picked up another 16 ticks on this one to get us to 36. Then we had a break even, and then we stopped out, put us down to 26, and then we had a 25 tick trade right there to get us to 51. And that was where we stopped trading the ES. It started gapping around, and on the DOM, it just looked like a mess. So I just put that aside, and I traded gold and the Russell, because on the DOM, it did not look like a mess. And it was a little easier to see. So I bumped this back down to a 5-minute this time of the day. I was trying to see what those blue lines were coming from, where I drew those on, but I can't find it. Okay. So there was a ton of opportunity on the ES today, but it was gapping around quite a bit. So it was hard to trade with the DOM. So I didn't. I just moved on to something that was easier to trade, which was the Russell. I didn't trade the NQ at all today. I didn't even really look at it. So I'm not going to bring that one up because there's probably be a million trades on the NQ. Okay. So let me scroll backwards here. Alt and then back. Dan, you do have access to get in the room in the morning, right? And I'll go through and enable all the tools and everything that you should have enabled. I'll do that after I'm done with this, okay? But you should have access to get in the room at the very least. Okay, so here we are with the Russell. And this very first trade, we ended up with the break even, but the next one, this is where we got the goal for the day on this next one right here. Okay, then I'll send you all the information. All right, you'll get much more information later on when Val gets in front of her. All right, but I got 45 ticks on this one. That was where we got the goal for the day. Then I stopped out on the one right after. It brought me down. That was it, plus 45 there. Then I stopped out minus 25 there, put me down to 20. I got 25 there to get me to 50. Then I stopped out again, got me back down to 25. Then I had in here, I was going through some stuff about the diamond principle in here, basically. We went from 25 up to 44, and then from 44 to break even, then 44 to 64, then 64 to 84. And then we stopped out again. Wait a minute, somewhere in there we went from 64 to 84. I'm not sure that was a stop out there. Yeah, there was a stop out here. I remember that one. We went from 64 to 84 and 84 to 94. And then 94 to 106. And then we stopped out. This is this one right here, the 94 to 106. We went down to 81 on that stop out. And then I guess we went to 81 on this stop out. All right, and then we went down to 56 on this stop out. So we went from 106 down to 56 in 2 trades. We stopped out twice in a row right there. Then we started getting it back. We went from 56 up to 70, then 70 up to 80, then 80 up to 91, then 91 up to 97. And I don't have the last couple of trades, but we went from 97 up to 114 and 114 up to 124. I didn't draw those in. But this, if you want to take a screenshot of it, these are the rules for the conservative trend trade. Okay, if you want to take a screenshot of this right now. One, the price is below the YBR, right? Number two, down here, the price goes into the oversold. I mean, not the price, but the blue line, the trigger goes into the oversold. All right, now usually that's going to happen at some point. It's got to happen before you actually take a trade. It's got to come from the oversold. Then number three, it goes up into the overbought. It's going to come from the oversold, go to the overbought. Then when it drops out of the overbought, that is your entry point. Okay, I pointed right to the entry point with that big green one. That right there. Okay, we'll get on that, Dan. That right there is, just had a thought. Anyway, that right there is where you're gonna have your entry, okay? And that's the trade that I was doing all morning. You know, I really didn't do the aggressive trades. I really didn't do any of those this morning, I don't think. I might have done a one divergence trade, one or two right at the beginning. But this was the primary trade that I was doing all morning, because when you have big leg lengths like this is when you're gonna get the flat spots. You know, I don't know if you guys remember, I said after this one right here, we're gonna get a shorter flat spot down here at the bottom. And that's exactly what we got. Okay, so that was what we did today on the Russell. We had quite a few trades on the Russell, you know, 5, 10, 15, 18 trades on the Russell alone this morning. So it was all good stuff. Now, let me just say this again right now. If you haven't taken, see the long leg lengths, they create flat spots. That's when you need to do the conservative trend trades. See right here, it didn't go up into the overbought, so you didn't have a trade through here. You know, you didn't have a trade anywhere through here. You had one long trade right here. From here up to there was enough to get the stop to break even. Oops. What did I just do? Oh, I dropped price down there. Oops, let me move that back up. Move to existing pane above. All right, so what I was trying to show you is that in here, right here at the bottom, the down close of that, you had a nice short right there. It went down into the oversold, and you had a little bit of separation here, a little bit of divergence, right? And then it pulled back up right here, got into the overbought, where it dropped out of the overbought on this bar right here. You could have shorted again. Now right here, it didn't put in a lower swing until here, right? Then it pulled back up, and you could have shorted on right here where it dropped down right here. Now again, you didn't get a lower swing, and you got a run down into the oversold. So there's some divergence there. There's indicator divergence, right? The indicator showing it's lower than price is going. So eventually that's going to correct. And the way that this is working is it's correcting where the indicator is. All right, you see it gave you one long trade right here that was just enough to get the stop to break even, and then it turned around and gave you a short trade just now. It just gave you a short trade right here. And so far, that short trade would have been enough to get your stop to break even. Okay. Yeah, I know it's probably anticlimactic, isn't it? You've been hemming and hawing about becoming a passport holder for like a month, and then you did it, and you got nothing. I'm sorry about that. I will send you something. Okay. There was just another trade right here. Now this one, this is something I went over this morning. You see how this is not actually a valid trade, because this did not make it down into the oversold. It's got to come from the oversold to go into the overbought. It sort of maintains the trend within the oscillator. That's why I do that. It maintains the trend within the oscillator. So if you don't have a trend in the oscillator, then you shouldn't trade in that direction. You shouldn't keep trading in that direction. Like right here, where it didn't make it all the way down into the oversold, you might want to skip the next one. Right? If you had a next one in here, you didn't actually, but if you had a next one in there, you might want to skip that. So like right here, this one ended up working out, but it would have been a break-even trade had you done it. It still didn't get into the oversold, so you're still not going to do another trade in that direction right here. You see how price is trending up, and this is trending sideways to down. That's eventually going to correct itself one way or another. All right. You see right here how price hit the YBR. That means the YBR is going to flip on the close of this bar. All right. You see how it just did flip? So now you're looking for price to get down. To get down into the oversold. All right. For price to get down here into the oversold. And then you'll be looking for long trades. what you're doing. See right here, you finally got down into the oversold. So if it's going to correct to where the indicators are, you should have a move down here. All right. The way that it's worked out so far, I think on an up close on this bar, you're going to hit the YBR and it's going to flip the YBR up. On the close of this bar, it's going to flip the YBR up now. So you're not going to have a trade there at all. You might have a long trade, but from right here, you don't have anything. See, it flipped the YBR up. Now you need to get into the oversold on both gold and the Russell. You need to get into the oversold. Okay. There's the oversold on the Russell. It is the Russell, right? The oversold, yeah, it is. Okay, so here's the trade. It needs to go 10 ticks into profit like that to get the stop to break even, and stops at break even, and I'm out of break even. Now, I expect this is going to correct to the downside right here because we had price and oscillator divergence. All right. So I ended up getting a break even on that long trade right there. It didn't put in a higher swing. You did put in a run all the way up to the overbought. So right now, when it gives you this in the oversold right here, it's going to be a valid trade, but I wouldn't expect too much out of it right now. Right, it didn't give you the oversold, actually. And over here on the gold right now, you have a similar scenario happening here on gold. It's got a low here of 95.7, so you'd be buying 96.7. Okay, it would look like this. And I would expect kind of a similar thing. It just triggered me and it slipped me 2 ticks, and I'm going to bump my stop to break even. I would expect a similar thing to happen here where it doesn't get too much above the prior swing high, if it gets above the prior swing high at all. I'm going to take 2 ticks on that right now. And I got 2 ticks. Okay. And right now we're in the oversold again. So it's got to come onto the oversold to give you a trade. All right. It wouldn't surprise me to see this thing collapse right here and flip the YBR the other way. Okay. There it is. I was going to say it's fixing to give you, it's setting up to give you a long trade right here. Okay. And there it is. The long trade was from the open of this bar right here was the long trade. Okay. Here it is. From the open of that bar, my stop's going to break even. I don't know what this is going to have in it right here, but my stop's a break even, so I'm not going to lose anything on it. And it just took me out at break even. So it's 2 break even trades on the Russell while we're in this chop. Now, the fact that we're in the chop, you can throw this on here and start doing divergence trades if you want to. You know, you'd be long right now. You'd have been long from back here at the open of this bar instead of at the close of that bar. You would have been short at the open of this bar instead of the close of that bar. See, the long divergence trade would have just given you some profit right there. Now they're together up here at the top, so it's not going to give you anything. We'll see what happens. But did you see what I meant about the divergence and how I thought this was going to collapse a little bit right here? Which it did. Here, now this right here would be an aggressive long trade right now. If you want to be aggressive with it, it'd be an aggressive long trade. If you want to be conservative, you're going to wait until it comes out of the oversold. All right, it's a 50% retracement right here of this leg up. So an aggressive long trade might work out pretty well from right in here. Conservative long trade should work out pretty well too, because that's going to give you an up close right about here. And that should work out pretty well too. Okay. So either one should probably work out. The conservative, of course, eliminates the worry about the flat spot here, or the 100% retracement, which you're getting right now. Let me shut that off. Flat spot on top usually ends up being a flat spot on the bottom. Okay, that should make sense to all of you. This should do 100% retracement. And let it go down a little further here. Look for an entry. Once it gets down to this level, then I'd start looking for that long entry. If it goes through that, it's going to hit the YBR and switch directions. But this is the collapse that I was thinking about. There it is right there. That's the long right in there. Okay, and it just filled me. There it is. Okay. I still think it's going to go down further. I would have liked to have seen it go down to this level right here. If it does end up going there, it's going to stop me out. It's 2 ticks below. 2 ticks below where my stop is. And it did stop me out. And it just went down to that level. we'll see. I think it's going to flip the YVR right now. The gold over here did not make it up into the overbought, so you don't have a trade here right now. Coming out of the oversold right here, you don't have a trade. Could I please explain the divergence? How do you find it? Well, first you got to have these two things on here. You have the ultimate slingshot and two trades range trigger. The divergence, which divergence are you talking about, Masood? Are you talking about the divergence within the oscillator? Or are you talking about the divergence that I was talking about price and all that? Which one? Okay, in the oscillator, it's simple. When the blue leads into the overbought without the black, or the blue leads into the oversold without the black, like right here, this is divergence right now. It's led into the overbought without the black. You would sell right here at the open of that bar. Okay. That's divergence within the oscillators. Then these two things down here, you would sell the open of that bar right there. Okay, because the blue led into the black, and the blue led into the overbought. So with that, you don't need to have the YBR on here because you're doing everything based on what's going on down here. Okay, you're not really paying attention to what the trend is in the oscillator, you know, in where you are with respect to the YBR. Okay. See the separation right here. But in the beginning, we had to make a decision and say which one was going to be the leading one. And so just stick with the blue line, because the blue line is faster than the black line most of the time. Right, so we're not going to call this divergence right now. But you should have shorted the open of that bar right there based on that separation. Okay, and so knowing the way that price acts, it should have a leg down, then a leg up to about right here, right? Then another leg down. There's the price right there, went up to that level, that's perfect. All right, and now you should have another leg down this big. So it should get down to like right here. This is where price should go to, right about here. In that time, if the market's gonna be orderly, that's where it should go in that amount of time. Okay, now if you were doing the conservative trend trade, you'd be shorting right here. You would have shorted right here at the open of this bar. Okay, the close of this bar, the open of that bar, you would have just shorted right there. That's conservative trend trade. Okay, and it should make it down to here. All right, roughly down to here is where it should go. Now you're oversold right here, right? Crap, hang on. I don't want my stop to break even on that. Here it is. My stop's at break even, and I'm just going to lock in some profit on it. That's 11 ticks. There's 11 more ticks. You're oversold on this, and when it pops out of the oversold, it's going to give you nothing as far as conservative trend trade. It's not going to give you anything. So this isn't a bad thing that it's retracing a little bit right here. Right, it's retracing just a little bit as you get into the overbought and then sell off again and get down to this level down here. Now I eyeballed that level. I could draw exact time, space stuff for that, but I eyeballed it. And what I was looking at with that was this right here. Just let me draw it for you so you can see it. This is your timeline, and this is your price line. All right, that's what I was looking at with that. So what that suggests is that in this amount of time, it's going to go this amount of space. Okay, so you see it's gotten a little sideways in there, so it's taking a little bit longer to do that amount of space. And this I had drawn down here, but we need to move that up. This amount of space, I was eyeballing it, and it was off by a little bit. You see it's taking a little longer to get down there right now. The valid trade would have been the short right here at the close of this bar. You would have been selling right in there, and you could still be in that trade. I probably would have had it break even by now. Okay, so if that goes first, then it's not divergence. That's correct. Yep, it's going to be the blue leading right here. They're both going at the same time, and if you ever question that, just shut one off. Okay, You'll see they're right on top of each other. So it's not a trade in here right now. All right. Now, this last one that came out of the overbought did not make it into the oversold. Just the blue did not make it into the oversold. So this coming out of the overbought right now is not a trade. Okay, remember what I said just a few minutes ago about, about the oscillator actually giving you the trend information. It's got to go from the overbought to the oversold to the overbought to the oversold to continue the trend. Now we've gotten to the oversold. So now we can take a pullback up to here and then a push down using the conservative trend trade. All right. Using a conservative trend trade, you can do that. Using the aggressive trend trade, you would have shorted right here at the open of that bar. Actually, the open of that bar. You would have shorted right there at the open of that bar, which would have worked out okay. That'd be the aggressive trend trade. You also would have shorted at the open of that bar, which would have stopped you out. You would have gone long at the open of this bar, which would have worked out. Short at the open of this bar, which would have worked out. Like right here, a down close on this is a conservative trend trade. Okay, and there it is. That's a conservative trend trade right there. Here that is. 10 takes some profit and the stop goes to break even. So we'll get ready for that. Couple more. There it is, stop to break even. Now I'm gonna lock in 20 ticks right there. There's 20 locked in. There's 30 locked in. So this is 45 right here. There's 40 locked in, and that's 45. It's going to be 40 or 45. 45 is what it was. Okay. You see how simple that was? It was a conservative trend trade. You're waiting for this to come out of the overbought after it went down to the oversold, came back up into the overbought, and then went back down into the oversold. That's what you're looking for. I think I have, which one? I drew that on the Russell earlier, right? All those rules. Right here. There they are. Okay. Number 1, you're below the YBR. Number 2, price, the blue line down here, comes out of the oversold. Number 3, it goes into the overbought. Number 4, it drops out of the overbought for the entry. The entry right there at the close of that bar, the open of that bar. But you can see it coming, Dan. So you have an idea of what to do, what to expect. And when you're doing conservative trend trade, let me show you that again. Okay, if we have another opportunity here, hopefully we'll have another opportunity. Here we go. We just about have another opportunity right here. Make sure this stays on top. Okay, so we want this to close up and then we'll have another opportunity, right? I'll just keep going until we get another opportunity. I really want to see this close up right here and see that get into the overbought. It's not quite in the overbought. We want to see it get into the overbought. But what I would do if it did get into the overbought, let me just do that. See the top of this bar right here is 87.3. If you don't know where the top of the bar is, you can just do this. Click on this thing and click on data window. All right, and that's going to give you the information about the bar right here. The high of that bar is 87.3. So I would sell 80. This is a 19 range from 87.3. I would sell 85.3 is what I would be selling because that's where the open of the next bar should be. The open of this bar was at 85.2. So I would have been selling 85.3 on that. All right, so I'd be filled in this right now, and it's still not too late to fill in that. Right, so I'm filled exactly where I should be at 85.3. It hasn't gone 10 ticks into profit from the proper entry point, so that's still a valid trade. But you can put your trade on ahead of time. When you're doing the conservative trend trades, you can put the trade on ahead of time and have it waiting there. That's why I use the range bars, so you can do that. All right, so it wasn't actually a valid trade. I probably shouldn't have done this. It wasn't actually a valid trade here because it didn't go into the overbought, but I'm in it, so I'm gonna bump it to break even as soon as I can because it's not actually a valid trade. There, I'm bumping it to break even right now. Okay, and it took me out of break even. But if it were coming out of the overbought, that's exactly what I would be doing and thinking. Okay, and so you can see ahead of time where to put your order. That's why I use the ranges that I use, like a 19 range, it's 20 ticks from the top to the bottom where you should have your order. Okay, that's why I do it that way. And the conservative trend trade, if you have really long trending markets like we've had, really volatile trending markets like we've had in the last couple of days, then the conservative trend trade is easily the one to do. If you have a lot of chop, like in here, if you have a lot of chop like that, like most days you have a lot of chop like that. I mean, we've had so much volatility the last week since the tariffs have happened, but when you have a lot of chop, then the divergence trades are the ones to do. Can't do those divergence trades when you have chop because they work great in chop. But when you have long leg lengths, then the conservative trend trade is the thing to do because it works great when you have long leg lengths, in trends. Okay, like right here, you would short a down close on this bar. So the way that this would work right now, you see where the high of the bar is. Even this bar right here, the high is 89.5. So 87.5, 20 ticks below that is what I'm going to sell. Right, the high of the bar is right there at 89.5, 20 ticks below right there. When the bar closed down, it filled me in right there, exactly the right spot. We got down into the oversold, and we got down below the overbought. Everything worked perfectly there. You can put your order on ahead of time, like I just showed you right there. Okay, and all this is being recorded on YouTube. Looks like it's going to stop me out. It did stop me out. But all this is being recorded on YouTube. So if you want to go back and see how I did that, because I know I did it really quick, you go back and look at the YouTube recording. You can see it's 13:32 on the clock on the chart. So when you go to YouTube, you can come all the way to 13:32 and see how I just did that. Now, I know that one stopped out, but during the day, more often than not, they don't stop out, and I make money on them. Okay. All right. And that did not go into the oversold, so you're not going to look to go short again. Right, and so with that, I guess let me say this. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. It's going to bring you to this registration page. Just fill it out. Down at the bottom, we need your TradingView login ID. If you don't have one of those, click on this link right here to get your TradingView login ID. All right, once you have that, supply it, and we'll get your indicators indicating on your charts as soon as you can. All right. That is it. With that, I'll pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Jessica just sent me a message. Okay. Dwayne is ready.
Recap of the morning session.
Today it took 3 minutes and 3 trades to get to $2,250 with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we're going to wrap it up with our good word for the day. Pass it on to others. 2 Timothy 2:2. And the things that you have heard from me among many witnesses, commit these to faithful men who will be able to teach others also. So, what's your goal in life? Survival? Success? Or succession? Some of us suffer from duck syndrome. We appear calm on the surface, but underneath we're paddling like crazy. We think, I'm glad people around me don't know how much I don't know. And we keep them at a distance, hoping they never find out. That's not how God wants you to live, as the source of your own strength and your own wisdom. David wrote in Psalm 27:1, "The Lord is the strength of my life. Of whom shall I be afraid?" On the other hand, some of us strive for a self-centered form of success that begins and ends with us. Our philosophy is look out for number one. When that's your goal, God cannot trust you with success because your motives violate every principle in His Word. God told Abraham in Genesis 12:2, "I will bless you and make your name great, and you shall be a blessing." When your heart's intent is to bless others, God will bless your endeavors. Jesus said in John 15:16, "You did not choose me, but I chose you and appointed you, that you should go and bear fruit, and that your fruit should remain." Part of God's plan for your life is passing on to others what He has entrusted to you. There is no lasting success without a successor. That's why Paul wrote this. "And the things that you have heard from me among many witnesses, commit these to faithful men who will be able to teach others also." 2 Timothy 2:2. So the good word for today is pass it on. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.